Hey, what's up, hodlers? Let's talk about what happened in crypto world today. So you have Bitcoin falling under the 30,000 US dollar mark. It's an important threshold as it marks the first time that this has happened since June 22nd. And it's been trading in a sideways pattern ever since China cracked down on the mining industry when Bitcoin lost about 50% of its market value, falling from its all-time high of around 64,000 US dollars. If you zoom in here, you can really see the nosedive that Bitcoin took right there. It has everybody wondering whether this crash, this break to the downside will continue, or whether Bitcoin will manage to recover as it's done in the past rather quickly and pull the entire market up with it. So currently you have Bitcoin trading at just under 30,000 US dollars at 29,936. So it looks like it's trying to claw its way back with a market dominance of just around 48%. And you have ETH, which managed to reclaim its 1800 foothold and has a negative performance of just over 1%. With all these negative price developments and the FUD swirling around, it has a lot of people questioning whether the stock to flow model, a famous model used to value Bitcoin and also used for price predictions, whether or not that's still valid. You have a guy from Coin Bureau, which is the #1 YouTube crypto news channel, making this a topic today and discussing with his audience whether or not the model is still valid. It predicts a top out price of 288,000 US dollars at the end of this bull run and predicts a current price of around $115,000. So the current price of 30k, quite a ways off. Both Plan B, the creator of this model, and Guy agree that it's now a make or break phase as to whether or not it is valid. There is no doubt that the stock to flow model has been one of the most accurate Bitcoin pricing models around. I actually call myself a fan and have referenced it a number of times on the channel as a vital indicator to watch. However, as prices have diverged, its accuracy appears to have come into question once again. On the plus side, he goes on to say that institutional demand will at some point likely push Bitcoin's price back into the stock to flow model's favor or into its predicted price range. One of the reasons for this is that the Bitcoin wallets with at least 1,000 Bitcoin in them, so-called whale wallets, are currently at a 2-month high. Speaking of institutional adoption, a new study came out that shows the majority of institutional investors are ready to buy digital assets. This survey was conducted by the crypto arm of Fidelity Digital Assets, which is an asset management giant, which is also looking to expand its crypto business by hiring 100 full-time employees. Now, the study surveyed 1,100 institutional investors to understand their expectations regarding digital asset investments. The survey was conducted between December 2020 and April 2021 and surveyed high net worth investors, family offices, digital and traditional hedge funds, financial advisors, and endowments. So a very broad spectrum or base of potential institutional clients. Some 70% of these participants do expect to invest in digital assets within the next 5 years, and 9 out of 10 of those who are interested in investing also foresee their companies or their clients' portfolios adding digital assets within the same time window. Now, an important piece of the institutional story are of course also ETFs, which have been applied for, especially in the US, but denied since seemingly forever. In a recent interview on CNBC's Squawk Box, which is a business show, the CEO of Grayscale, Michael Sonnenschein, said that Bitcoin ETFs in the US are not a matter of if, but rather a matter of when. He went on to confirm that Grayscale is 100% committed to converting its Bitcoin trust, probably the closest thing we have to an ETF at the moment, to convert this trust into a BTC ETF, when regulators allow for it, that is. Now, the topic of Bitcoin ETFs have surged in popularity recently, in particular with Brazil and Canada having approved such products already. But also in the US, there is no shortage of applicants with institutions such as Van Eck and Skybridge Capital, which is Scaramucci territory, and also Goldman Sachs being among the applicants having filed with the SEC. Now, Grayscale CEO Michael Sonnenschein went on to confirm that the recent downtrend in the cryptocurrency market, in which BTC lost more than 50% of its value since the mid-April peak, is in part attributable to the Chinese ban on mining. But he also noted that long-term investors had used this opportunity to accumulate a large portion on lower prices. So in other words, institutions are buying the dip. In terms of timing for when we can expect such an ETF approval, Greg King, the CEO of asset management firm Osprey Funds, indicated he believes that 2022 would be the earliest. He's quoted as saying the institutional investor interest is very robust, and we see some activity amongst the Bitcoin whales that they are starting to accumulate at around the $30,000 level. However, he also cautioned that it seemed like almost a foregone conclusion to lots of folks that such an ETF will be approved. However, he thinks there's a bit of a hangover effect there where people are maybe realizing now that this is not around the corner. But it's their hope that it does come eventually. He would just say that 2022 is probably the earliest that we will see that. Well, that does it for me. Thank you everyone for watching and see you next time. Bye bye.